Welcome everyone to the Kendall report and the live stream. I'm going to let the room fill up just for a few minutes and we'll get going. Yes, the Bears are getting destroyed, to say the least. Hopefully that's who's buying. These guys are covering up. Yeah, listen, just as we get, we're about 50 people now. As we get going today, I really want to engage you folks. I'm going to do some basic comments, not going any big rants or anything. And I'll go through a lot of analysis. I usually stick with the S&P, but if there are some if there are some individual stocks and other things that you want me to look at, I'll do my best to cover it. You know, we're here in less than a minute. We're getting close to 100 folks on, so we'll just give it about 2 minutes. I'll just kind of talk a little bit about what's going on. Obviously, the markets are. It does feel like a melt up, and I'm going to save some of the analysis. There's some new Fibonacci projections that came out today, which I'll go through, that is based on all of the activity that we're seeing here. So this is going to be an exciting day. The interesting thing is, as I've said in some of my tweets and on video last night, is we are going to be able to watch the real-time operation coming on when Chairman Powell comes out and talks. We'll watch a little bit of that, at least the review. We'll probably put CNBC on the background. We'll watch just a minute when they read the statement. We'll look at it. We'll also look at the. Yeah, I'm getting some data glitches. Hopefully everything's coming back okay. Anyway, yeah, we'll take a look at some real-time activity. It's going to be interesting, folks, because what we're likely to see is some sort of adverse reaction when the Fed comes out. Everybody's been anticipating everything that's going on. So, well, we got 160 folks. Let's go ahead and kick off. So I'm just kind of rambling on until we get some things that just to fill up the room. So anyway, thank you everybody for spending some time. Really been enjoying a lot of the comments on the line. It's fun to see some engagement. I've only been running this channel for roughly about 6 weeks. This is probably week 7. We used to do a little post for our clients, but I opened it up to the public, and we're getting a lot of activity, which is awesome. I really enjoy a lot of the comments and folks and insights that you folks are getting, both from my work and your own insights. It means a lot. I try to get through this stuff best I can, just to have a pretty good idea. And so let's go ahead and talk a little bit about what's going to happen here shortly, and then I'm going to go into the S&P. We're going to take a look at some of these new projections and things that are coming out of the system. Those of you that have been watching the channel, you know our models actually signaled a buy on a short-term basis, which is becoming a big trade back on 326. We'll take a look at some of these things here shortly, but the Fed is basically buying everything. Okay, they lowered reserve requirements to 0 on banks. So just know that none of the money that you have in the bank has any reserve behind it. So said this in a video many weeks ago, is you can look at it that the banks are 100% liquefied, or they're 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 very risky or incredibly leveraged. And I'm kind of in the camp of the incredibly leveraged side, just because it's just kind of scary knowing that they have no money there. The old standard was basically uh, 10 to 1. So you have every dollar that you have in there is being levered 10 to 1. Now it's whatever they want to do. It's the old west, and everything's open. The other thing is they've expanded their swap lines so that there's so much disruption of capital that I've been talking about. This continues to be the case as we go through all this shutdown craziness, and this is the Fed is trying to fill the gap. They're buying corporate bonds. They're buying MBSs, mortgage-backed securities. They're buying muni bonds. They're buying commercial paper. They're expanded repo operations. The Fed and the central bank is running the country. Now, we could go into all kinds of conspiracy theories and stuff, and maybe this is what they always wanted. This is what we're seeing here is what I've referred to in the past as involuntary socialism. So we're seeing the government just take over everything. Meanwhile, the enthusiasm in the markets are just amazing. I've never seen a fundamental backdrop like what we see right now, with the economy destroyed and the market's vertical. There's such a disconnect, and I know that, and I've said this in last night's video, the markets are not the economy, but I still believe that ultimately there is going to be some reckoning with the real world, and everything's going to have to come to get back together at some stage. So what we're seeing is this massive divergence, and the machines and speculators and everybody piling in, the stampede. Maybe a lot of folks got out, and now the fear of missing out, or FOMO, is driving just about all the craziness that we see in the markets. And they're starting to come off a little bit. I've got a 5-minute graph up here on the screen right now, so they are starting to sell off a bit. We did print up to 2860. I'm sorry, 2944, and now we're 34. So we're 10 handles off the top right now. But the Fed is the game. And I mentioned in last night's video is that this is a historic moment that we're all seeing, not just because of the coronavirus, but the fact that the Federal Reserve, the federal government, is stepping in at levels they are. Now, the Fed their balance sheet's likely to go to at least 12 trillion. That's 50% of GDP. And people go, oh, that's no big deal because that's, Japan's at 100%. And the Japanese have been driving this dialogue for 20 years, actually, that it's okay to go nuclear and buy assets. Now, there's been a lot of talk about folks going, well, do you think the Fed's going to buy equities? Well, not right now, not when they're going up. If they're going to save the market, they'll do like they did in the MBSs, in the commercial paper, in the municipal bonds, because these things were getting crushed. And they absolutely, while they were getting crushed, they came in to save the market. There's no reason for them to buy equities right now. Everybody else is taking care of that for them. So maybe, so let's do a couple things. Let me go through the S&P, talk about, I've got the 5-minute graph on here. Let's look at a daily graph, because I want to show. Matter of fact, I'm going to go over, and in fact, if you folks would just maybe comment for me whether you like the black background on these charts or the white. I've got the black up there. There's some things that are better on the white, so I'm gonna switch back and forth. So we're gonna go to white here. But the thing I want to show you that is pretty significant is this. I'm going to put a data window up here. And you'll see three dots up at the top up here. I think I can zoom in. Let me try that. So you'll see these three dots that are right up there, probably a little small on your screen. Those represent a target range that come from a Fibonacci projection tool that's in software. Everything that you see on the screen right here is all proprietary indexes. They are they are the PPMs that I talk about are price pressure momentum is what PPM stands for, and what that means is the angle of attack of the markets. And we've continued to see a pretty positive angle on as far as what the markets are doing here. And these three dots, what they represent, I built into Logic, into the software, an automatic Fibonacci projection tool, and it comes out of a pattern. And this pattern suggests that the minimum objective, this is new, this just came out of today's activity, 3177, 3353, which I believe is really close to a all-time new high, and 3461. So it's interesting because the Secretary Treasurer, the President, other people have been saying we're going to have a V bottom, and all of us guys have been around looking at the fundamentals of the markets and looking at what's going on and go, wait a minute, that can't happen. And certainly at the moment, markets are starting to believe it can. And you'll see another line on this page here. There's a black line where my cursor is right now, and that is the 200-day moving average, which is currently 29.96. And we're looking at the futures right now, and so we're getting really close to that 200-day moving average. Typically, what will happen is we'll get some resistance on that side of the average, and we'll see a reaction from that point. As everybody knows that's been around the internet or anything, the amount of I guess the number of folks that have been talking about this bear trap, that in itself probably was bullish. And it's just one of those things where markets do tend to do the opposite of what most people are expecting. Now, I've been talking about over the last 4 or 5 sessions that we had a high potential for a reversal, and we actually had a reversal on cash yesterday, but it took out yesterday's high that negated it. I discussed that in yesterday's video. But from a trending standpoint, this is where my world exists. I'm going to go back to the regular chart here. From a trending viewpoint, this dot, this upward arrow with a 1, that is where the models bought on the open of that session, and that was at that was on 326, and this number is telling us that there's a trend here, and the trend is actually maintaining a high level of momentum. And I talk a lot about these PPMs, and I'll go on just for another minute or so on this stuff, and then we'll go right to questions. But I just want to have a backdrop of what's going on here. But these PPMs here, these tell us about what the angle of attack of the trend. So a lot of folks, I do not use trend lines at all. They mean nothing to me. I do use moving averages that I always have on the screen, 10, 21, 40 period moving averages. And each one of these indicators, now over on the left here, PPM1 tracks the 10, PPM2 tracks the percent change per second derivative of the 21, and PPM3 tracks the 40. So what we're seeing here is once you get over 0.25, which is once they get over 0.25, you start to get into this trend mode. Now, and what that means is that the angle of attack is up and the probabilities of a decline diminish substantially. When they're above 0.25, it's at a 40% probability of the markets declining. When it's above that, like right now we're at 0.57, there's only a 30% probability, or otherwise 7 days out of 10, or 7 times out of 10, it's not going to go below 28.26, which is the 10-period moving average. And so that average is going to be the key support level. Just real quick, I want to go and take a look at the weekly graph, and then we're going to go to questions. Weekly is still, this is interesting because I'm looking, let's go over to the cash real quick. Let's take a look at the cash markets, and I'll stay on the white charts for a moment. But you're looking at right now, 29.31 is 0.618, most advertised number ever on the market. And one of the things that we're seeing on the chart here, let me give you one last view. So what we're seeing is there's 3 targets that were issued for after on the breakout today. Is the high target on the screen, 27.29 was a minimum, 29.34, which we're trading at right now, and the last one's 30.61. There's some other numbers. I mentioned a 30.34 last night in the commentary. So these are the high end and where this should go. I'm still expecting a retracement sell-off, but now the 200-week moving average, since we're back above that, is actually probably going to be the support, and somewhere around the 2660 levels, a number that you've heard me talk about on my broadcast. So these patterns are still likely to set up. We could just see a complete V and off we go. My expectations are that as we come into May and we get into June, depending on how this economy opens back up, that folks are going to start to go, well, maybe we're getting ahead of ourselves. But for right now, trends are all up. Everything's moving sharply higher. So, okay, so I saw one of my associates says it looks like the white background has better vote, so we'll stick with that. Wow, impressive. We got 444 people on here. This is awesome. Yeah, so I'm going to grab some random questions here. Bear with me one second. And we just want to keep in mind that in the background, we've got about 20 minutes away from the Fed announcement. Yeah, there's a couple things. There's something I did not bring up, but I am, bear with me one second, folks. I'll get that off the screen. But I want to bring up, let's talk about a couple other things. One of the things that I have been talking about, I've been showing you our database on our legacy software program, so you can just see what's coming out. Right now, if we just go to our research section, look at the total symbols of 16,724, what you're going to see here is that there's currently, which is, let me get over to the daily models. Right now, 9 of the 12 sectors are bullish, 75%. This shows you when they came on, 331, 327, 424, these different sectors came on. We can break down in each one of these. We can come over here and basic materials up 14, and we can look at the subgroups so we can see exactly what groups are out there. But we go to chemical manufacturing, we'll just drill down for a second, and you'll start to see which symbols, what are working. Here's DuPont is up 35%. There's a lot of positive. I'm just going to pop it up here real quick just so you can see this. So this chart here, this is, I don't know, it looks like a penny stock, right? I grabbed a random one. But this is, this, I thought it was something else. So let's grab another one, 170%. No wonder. Let's grab a real company here. It's interesting just looking at these companies, what's really moving. And one of the things that I want to point out when I'm looking at and doing my analysis, everything I track 16,700 stocks in our quant database, and this is why I talk about our database and rotation a lot. This is a really important factor, because what happens is it tells me a lot about how many trends are out there. Right now, there's 8,930 symbols that are signaled uptrends, or 53% of the database. So 50% of the stocks have triggered into a trending mode. And this gives me a lot of understanding of the underlying markets, what's going on behind the scene, how many stocks are participating. I don't just look at the S&P 500 to try to make some determinations. Let's go back over to TradeStation here and take off a couple things here. Yeah, I want to clean this chart up so we can just look at some bar graphs and see exactly what's going on. All right, so we got some moving averages. Going back to this weekly chart, you can see this V. We're coming up toward the 10 and 21 period moving average, 30, 21, 30, 24. One of the other things I'm looking at all the time is looking at some sort of some sort of conversion and clustering of numbers. So we have Fibonacci numbers, moving averages. Everything is clustering at around this 3021 number. And when I got the original signal way back on 326 to go long S&P, and a lot of symbols started to come in, then it was hard to believe that we would end up at these levels based on what we're seeing. And I see one of the questions that one of my associates is telling me is, what would you buy long term in this current market? I don't even know what that means. I apologize. Everything I do is model and quant based, and long term is not, I guess, not something that I would say I'm good at. Trying to pick a stock long term. I'm really not a stock guy. I'm really I guess a bigger picture kind of situation. We run a lot of stocks. Everything we do is quantitative. So we actually run large direct indexes that we trade each individual stock in the S&P 500. We tell you, we actually model every symbol individually within vast big portfolios. So that's what we do for a lot of investment advisors and folks like that. So as far as picking an individual stock, I wouldn't say I'm very, very good at that. I did notice, let's go up and put, and listen, when you guys ask questions about anything to do with symbols and stuff, would you please make sure you include the symbol? Because I'm not Jim Cramer. I don't know all this stuff. So based on what I just said. But what we're looking at here is, I've just brought up Netflix, and Netflix is interesting because it kind of had its day. You're seeing as it made a new high, it's actually backed off quite a bit. And what's interesting, about 2 days ago, we actually got a sell signal on Netflix to get out of this. We were long down in this area over here and got a sell signal on a short-term basis. And that's the other thing that I was pointing out on commentary is that what we're seeing here is a lot of rotation starting to happen. So we have two models that model on daily charts, intermediate and long term. We actually run monthly models, and what we're seeing here is the first model 1.2 we talk about is a very short term. It's a short term model, but it's more aggressive. It will catch that V bottom, and you're talking to guys traded for over 40 years. And one of my biggest frustrations going way back in the 80s when I developed a lot of the core concepts in these strategies was I'd miss that V bottom, always waiting for the right shoulder to set up and they'd leave me behind. And I got so frustrated. So 1.2 model was actually to eliminate that frustration when I worked really hard on identifying the V bottom. So that's why a lot of this stuff worked pretty good is because I programmed it to actually to identify and buy those bottoms. Second here, I'm just looking through a couple more questions, guys. Let's take a look real quick here, and this is probably another driving force, crude oil. I'm going to put up I know everybody's going off June crude. I'm sure most of you have heard the stuff that's going on with USO, some of the ETFs. And I can tell you, ETFs are very dangerous. For the most part, about 80% of them are shit. They're constructed just to collect fees. Maybe they all have a good reason when they set them up, but there's just so many in there. They can be very illiquid. And these ETNs, we saw what happened with the May crude the other day, and they blew up all of these ETNs and some of these ETFs because especially when you're dealing with commodities, these things are very, very dangerous to get involved with. And you never know exactly what can happen when they blow up. And one of the things, and we'll take a look at this in a minute, is things like GLD and paper gold. There's more paper gold than there's probably gold you can get out of the ground for the next 10 years. So there's these kind of gold and other elements out there. These ETNs are subject to blowing up, just like what you saw in crude oil. So be really careful with this stuff because a lot of this stuff gets overplayed, and the open interest gets going. Just blows up everything. And the future side, like what we saw in the May crude the other day, where we went to a minus 40, was just a complete catastrophe and cluster on a delivery process. And then we see, we go into the June crude. So all of these folks, USO, all of the ETFs and ETNs out there are trying to go to the back months on the back months on all of the crude contracts, trying to find some liquidity, trying to find some pricing. So this market here is up 25%, up $3.15. And I want to talk about this just for a minute because this is actually a really positive pattern. We're going to trade up into these moving averages, probably back to 20. And I'll go to the next contract out here in a minute. But all these patterns look the same. The prices are different. And that's one of the things when we came into the May collapse, let me put that up there real quick. We came up in When this contract spiked down this day to minus 40, the patterns this pattern right here where this is going down, they all look the same. And and so what we saw is that June, that all the back months start to follow. And one of the reasons why crude oil goes up, there's a cost of storage and carry to store this stuff, and that's why you see progressive prices. If you look at a future string and you start to look at June, July, and you look at all the months going out, they trade every month for delivery. So you're going to see premiums as you go further out. You get a higher price. So these ETNs, sorry to get on this rant, but these ETNs are at a place where things aren't just aren't very positive as using them as an investment item. I know a lot of folks, you might be able to pull off the USO trade or one of these ETNs, but be careful getting involved with this stuff and be careful. So let's go ahead. I mentioned GLD, and gold continues to kind of consolidate. I'm going to bounce over and go to cash gold here first. I'm going to go to the futures. This futures pattern is still, in my opinion, still bullish from the standpoint of this basic pattern. We're holding right on this 21 period moving average. This is a critical point. If we go through here, then we could go down towards the 1650 level. I'm not sure that's going to happen. PPMs are starting to find some traction, so this is should start to go up. But just remember this stuff when we're looking at these some of these ETNs and ETFs, that there's a lot of risk in these things, and the momentum is just not. You would think that with everything that's going on in the backdrop, that gold would be, at 1800 already, but it's not. Um, somebody asked a question. Do you think there's going to be a correction in coming weeks? Switching back to the S&P, I would suspect there will be a correction. Uh, and, but what we're seeing, there's a couple things. And I think 2 evenings ago, this stuff all blurs together now that I'm doing daily videos. But the dialogue, just so you know, on the general dialogue of what I'm trying to do on my daily commentaries, I'm walking forward and trying to connect the dots every day as the markets unfold. So, folks always have tried to hold me, into this bearish, bullish kind of thing. But I'm flexible. I'm a trader by heart. I'm a quant by trade, and so I'm looking at trending markets, and I'm willing to change my opinion in a second if it needs to be changed, and that's based upon market activity. As they always say, never fight the tape, don't fight the Fed. The market prices are right, you're wrong. You have to always try to do those kind of things around the markets. You can't be hard coded and have attitudes in what's going on. And so, but this, uh, this is pretty. I think this pattern that's unfolding. This is a serious trend that has developed, and it continues to develop, as I talked about earlier. We are 11:02. Bear with me 1 second here. I want to try to look at something here.
The drugs, public.
Yeah, sorry about that, folks. I was just trying to get set up so we can listen to this Fed statement when it comes out. The good news is I think I can back it up. So I just want to hear the statement. I want to have the markets up. I'll bring up this screen here. We're seeing some selling ahead of it right now. We're starting to see moving down 27, so we're about almost 20 handles off the highs right now. I suspect I'm still expecting some kind of negative response. And just for those of you that are day traders, let's talk about this for a minute. Is that one of the things that you look for? We used to always fade the news, and you'll get whatever initial reaction you get in the news. When it comes out, you'll see a response. It'll rally up really strong, and then it'll fade. So you try to sell the response, or you buy the response. If it goes down first, you try to fade whatever that initial move is. There's usually a really pretty good trade. We're talking 3, 5, 10-minute trades maybe. Sometimes they'll end up being much bigger, but there's always a really good scalp there for those of you that are trading and trying to do some of that type of activity. Um, um, yeah, so somebody asked the question, why is Berkshire hiding, or actually hiding is probably a good name, holding so much cash? They must know something. Warren Buffett is so old, so out of touch with just about everything in life that there's no reason to watch Charlie Munger and Warren Buffett. I know a lot of folks endure them as geniuses, but there was a guy named Peter Lynch back in the day that ran the largest mutual fund on the planet. He basically bought everything. The market went up, and they said he was brilliant. Warren Buffett's had the benefit of insider trading from the standpoint in 2008. If you look at the Goldman Sachs deal and other deals, he has hung out. He has been trying to find a right word, a lackey for every administration since he's been an investor. He's always hanging around, and he's always, whoever the president is, he's usually got some kind of connection. He's got a government connection. In '08, when the markets blew up, he got some real sweetheart deals. I always say anybody can make good investing if you had if you had a guarantee of the U.S. government that you couldn't lose. But we'll continue to kind of, I'll kind of go through some of these comments and try to, just discuss some of these things that are coming up here. I'm just kind of scrolling through for a little bit. Yeah, one of the things that would be kind of interesting to do, I've been researching it. There's this thing, I think it's called super fans or something, that Google started, and I may I'd like to be able to actually have some call-ins, and I think some of you folks have some really good questions, and I'd like to figure out how to do some call-in stuff here so I could have much more interactivity on everything that's going on here. Let's do. So let's go over to another chart while we're waiting for this news to come out. And there's a symbol here by, let's take a look at BSGM. So this is a daily graph. I'm going to put on a trade on this thing just to see what this looks like. Yeah, so really nice trade. Our models bought this stock here at $3.84. Now it's 9, so that's a pretty good trade. These type of trends that we're seeing like this, these things are all over the place. These huge moves. Some of them in the pharmaceutical, other things other things are even stuff like XOM, Exxon. I'm going to leave the symbols. It's starting to move pretty good. You think oil's down. There was a study done a long time ago. You're going to remember I'm an old dude, so been around a lot. And there was a study that was done that showed that when crude oil prices were down, oil stocks did better in lower prices when the underlying commodity was actually declining. And I'm not sure why that is. I forget what the outcome of that is, but we're certainly seeing this here. See that on this date here on 326, there was a ton. There was, I think, about 3,000 to 4,000 symbols came out of our database on 326 to buy, and a lot of those symbols, about 75% of them have done really well, and some are just through the roof. Even our friends like at Amazon. Here's another one. See what the date is on this buy. 325, the day before. So a lot of trades came out that just kind of skyrocketed. These Amazon this one makes sense. Some of these don't make sense. Some don't. Yeah, I'm just looking through some questions. Let's look at some of these. We'll start with the daily and look up, and let's look at GDX, some of these gold, the miners. Yeah, these things have actually done pretty good. Another one of those, there was a buy and a whipsaw sell, but it came back in on 4.2 and bought at 25 on this one. So pretty nice trade. You're looking at 30+% gain. That's a pretty good trade. We go over to the weekly and look at intermediate here. Oh, you know what? I think it's Fed time. Let me just see if it's over there. We'll take a listen at it real quick.
Health now.
All right, folks, we're going to give this a shot. We got to put up with Steve Leeson. He's a little bit annoying, but we'll go ahead and give it a shot.
Historic Fed decision. Steve?
Here we go.
Thanks very much, Kelly. The Federal Reserve saying it's leaving rates unchanged at that range of 0 to 0.25% and saying it's going to keep rates there until it's confident that the economy has weathered the impact of the coronavirus and is back on track. Federal Reserve saying in its statement it is committed to using the full range of tools, and you've seen that in the programs that have been announced. It will continue to purchase treasuries, the Fed says, and mortgages, quote, in the amount needed, end quote, and will continue to offer large-scale repos as it has been doing. Goes on to describe the impact of the coronavirus on the economy, the way it sees it, causing tremendous human and economic hardship, the statement says, and measures to protect health have been causing the sharp economic declines and the losses in employment and jobs. On the inflation front, the Federal Reserve notes muted inflation, says weak demand and lower oil prices are holding down inflation. Disruptions to economic activity, it says, have impaired the flow of credit. The public health crisis will weigh heavily, it says, on economic activity and employment. And just a bit of analysis, picking on something that was just said there. There is no forward-looking aspect to this statement here. Generally, the Federal Reserve says this policy will lead to X, continued sustained expansion, things like that. There is nothing here where the Fed says the policies we have now.
All right, that's enough of that. Yeah, so we're seeing actually virtually no response right now. This is over on the screen right now is a 1-minute E-mini chart. Maybe we're going to get a little bit of a sell-off. It looks like it's trying to weaken a little bit here, but not much of a response. I guess everybody knew what was going to come out. It was anticipated. I think the next couple hours will tell us a lot. We're up 2%. I wouldn't be at all surprised to see us at least slide down and sell off in toward the close. Maybe we'll finish back below 2,900. We'll just have to wait and see. But there's very muted response. I was hoping to get some nice activity here. We're not really seeing anything at all, and so this is interesting as well, just where everything's at. And one of the things that Leisman was just saying that I thought was interesting is that there's no forward-looking statements. Now, this is true with virtually everything right now. Very few companies are willing. We've got earnings season going on in the background, which obviously there's a lot of tech companies coming out today and tomorrow, the big boys, Apple and the likes. But nobody is saying anything about the future, which is interesting. And meanwhile, and over the past several weeks, I've talked about this, and this is interesting from the standpoint that the world is operating in this vacuum right now, that no one really knows what is going on, what the likelihood of this shutdown is going to be. There's a lot of estimates. Almost every company is forecasting a 20 to 30% decrease in revenues going forward. So, when you look at this stuff and you try to put the fundamentals and the technicals together right now, you just come up with nothing. There's nothing you can say that's going to actually help you understand what's going on. So it's all about the technicals right now. There's nothing about any of the fundamentals that are going to be helpful. I've talked about this on and on my daily commentary, because my commentary is aimed for our community that we talk to, but I'm finding that it's got a broader appeal. Is that we have our customers, our institutional type customers, and they need to talk to their clients about what's going on, and that's the kind of dialogue that I put out every night on my videos, so that there is some kind of understanding the best you can in a real time, real world understanding of what's going on from time to time. Right now, long-term predictions. I've been doing this a long time, folks. I've been head financial analyst at major firms. I've been in research department, Merrill Lynch. I've been all over the place. I've been an institutional trader. I've been on the floors. I've done a lot of stuff, and I've never, no one's ever seen anything like this. But from a market viewpoint, from the standpoint of having context of what's going on, you usually can connect the dots. The dots don't connect right now. So everybody's running in this kind of guesstimate world. We've got elements in the markets that didn't exist before, such as the algo traders and all these different machines that are running the business. And even on the individual stocks, there is market. I used to be a market maker on a trading floor, and there are no market makers anymore. Market makers are all algorithms. So when you folks are buying stocks, I don't care where you're trading stocks, when you see those bid-ask are coming from a machine. The machine's looking at inventory. They're looking at what they have. They're making the same basic kinds of decisions that were made by market makers, but in a more dynamic way. And they're going to quick, and bids and asks are going to be quick to leave, unlike the old days where you might have a market maker that's willing to take down a certain amount of stock. These algos don't take risk, and that's why when we were seeing the crazy volatility, when we were seeing 2,000 point days in the Dow Jones and 250 points days in the S&P, that's why, because these algos do not absorb stock. They go with whatever the flow is, and those bid-ask are moving around very dynamic and very quickly, and there's only a handful of major players that are making those markets, and it's nice to see, even though liquidity is nothing like it used to be. Well, we're looking at the screen on the far left here. If you look at this, you'll see on contracts 22 by 40s, they're 30 by 60s. These are very, very small numbers. That you could add a zero to those numbers if you went back 10 weeks ago. There'd be 320 by 470. It would trade quarter bid at 50s back and forth. They might trade for 2 or 3 minutes, work through the bid or the offer, and then go up a tick. And it was very stable. Now what you see is probably anywhere from 50 cents to a buck on the E-minis. If you're a scalper, it's very difficult to be a scalper in this environment. I've been a scalper for many, many years, and it's just no way can you do any type of that activity. You now are down to taking short-term type activity. Now, scalper to some people means something different. For me, scalping is literally 1 or 2 ticks scalping the bid ask. Some people look at scalping as trading off a 5-minute chart. So, but what I'm saying is there is no liquidity out there. So everything has changed. I don't know if we'll ever see the markets back. They feel pretty broken yet to me. I want to go over. Let's take a look at the VIX here, and this is somewhat interesting too. We might be able to get a view of how this thing is really looking here. This huge, when the VIX was at 88 or whatever it was, that was ridiculous. At 31 is basically, still probably overpriced, but you see the PPMs. I just want you to see that the other thing that was interesting on this particular chart is I've got one of my models running on this, and on 12/06 of 19, the model kicked a buyout on the VIX. And this was obviously weeks before this thing exploded. It still has a long position. It hasn't exited here. Typically what will happen in this kind of pattern right here is that we will get something that looks like this. It goes up from this trade, comes down, you get a rebound up. So this will tie together with some analysis, is that if we're going to get a rebound up on VIX, that means there's a good chance we're also going to get a correction on the S&P. And then when the VIX comes out, there'll be a sell signal that comes in over somewhere over here, and then the VIX will start to maybe stabilize from there. We're still going to see, especially since we hit this 21 period moving average. Let me just keep going through here. I kind of stumbled onto this idea here. But what we're seeing here is over on the left-hand side of the screen here, PPM is 3.20 or 3% on the upside. We've sliced through that because of this crazy volatility. We're looking at PPM2 at 2.96, and that is it's also breaking through its derivatives. So that's telling you that it's losing momentum. But what's likely to happen is that the VIX will come back toward this 10-period moving average around 46 or so, and then it'll start to tail off again. So there should be at least some type of response when it comes to the markets actually trading lower. So I'm going to go back over. I just want to take a quick glance at the futures and see what we're doing there. Yeah, so we're just stable since this report came out. So no, I was really hoping that we'd had the opportunity to hang out together and see some real volatility as far as that stuff goes. Let's see, as we come into about 7 minutes to go, I'm going to keep these things to an hour every Wednesday. Yeah, I just, one of the most recent comments here was the fact that the media keeps pushing so hard that there's something going on we don't know about. Yeah, the stuff doesn't make sense, right? So I don't want to get uh, too deep in there, but yeah, there is something going on, and the reluctance to reopen the economy and other things. I've been criticized for saying that the numbers on the coronavirus didn't add up to the point of shutting the country down, but who knows? I don't know anything other than I have an opinion about that. But there does appear to be something going on, and maybe it comes down to if there's a conspiracy theory out there at all that they wanted to destroy the economy so they could restructure it, and um, I would say that they're doing a good job with that. This kind of maybe we'll kind of finish. This is a um, interesting viewpoint. Is that if that's what they're doing and they want to restructure, one of the ways to do it is to have the Federal Reserve and the governments take over key markets, such of all the markets that I talked about in the beginning of this broadcast was, they took the banks to zero, the bank reserves to zero. They expanded the swap lines. They started buying corporate bonds. Corporate bonds and municipal bonds, by the way, is not on the Fed's mandate or on that they are even legally able to buy them. They're just breaking all the rules, and that's the other thing we're seeing across the board, from civil rights to everything that we're seeing going on. Everybody's breaking the rules because of the virus, so they've got an excuse, and they're taking. Um, I think it's, it, you know, it, yeah, it is what it is. Yeah. I mean, listen, I'm not trying to say the pandemic isn't real. I'm not saying that. I'm just saying you can't shut down the world economies and expect uh, to not have a change in venue. And the change of venue is the government's taking over, involuntary socialism, as I keep calling it, because none of us really wanted this stuff. And I said this a number of times over the past several weeks. We won't come out of this the same way we came into it. So it's sort of like if you go back maybe to the Great Depression, you go into the Depression, maybe probably a better analogy, I think, to that is when, if we maybe compare World War II era to current, World War II era was a massive spending to go against an enemy. Okay, this is your invisible enemy. But what happened then was they restructured the economy just for one thing. It became the war machine. And being an older guy, my mom actually worked in an ammunition factory. That's all they did. They turned the whole country, sort of like what you saw they did with the ventilators, only on a very large scale. They even restricted, you couldn't own copper. That's when you see the pennies made out of nickel and all if you look at collecting these things. So they went to an extreme because of what was going on. But what they did during that time is they formed really, is a new world order of how things were going to operate going forward. And probably what we're seeing right now is something very similar to that, is that they're restructuring everything. Start with financial, and then they're going to work on the social side of things as we go forward. And they've affected all of us in a lot of ways, psychologically, economically. Everything's changed, and we don't know what the country is going to look like, how people are going to respond, what society is going to be like. Of course, we have something with what we're doing right now. The fact that I have, almost 500 people listening to me right now, and I'm just, some guy out there that's been doing this a long time, and being able to talk to this many of you and communicate is something we never could do before. So with social environments and Twitter and all the things we all know about, These are major changes that are going on. So the new debt that's coming on is actually a takeover of the economy, and I'm not I don't I'm not saying that it was planned, but it is a takeover, and we're going to come out of this different. I don't know what it looks like. It will be different. All of us, we're going to have like decisions that we're going to have to make about how we operate in society. I'm a huge college football fan, and if they shut down the season, I'm going to be really, that's not going to be good, So uh, I love this country. I love what I do, and I know all of us enjoy our lives the best we can. And I want to get back to normal, whatever normal is. So that's all been changed. So, but make no mistake that the country's being taken over right now by the Federal Reserve, and the Fed is the last lender of resort, and they're proving that right now. They are literally taking over all the financial markets, and they will be making all of the decisions going forward. Now, you want to see something interesting? Go look at the background of Jay Powell, of Chairman Powell. I'm not all that impressed that that's the guy I want running our lives, but you know, you, you think you're electing presidents. It's always been like this. This government entity is the big dog now, and they will continue to make that stuff happen. So, yeah, man, I'd love to go into a lot of stuff about this, but I can tell you, um, uh, I my goal here is, and I criticize folks. My job is as an analyst at running a quant firm, being able to have a perspective that very few people ever get to see, is and being able to share that with you folks. This has been exhilarating for me. I'm serious. I've had I've been a head financial analyst at a firm with 5,000 reps, so I had a lot of years back in those days, and it's I take a responsibility for what I say. So when I'm presenting my daily videos, I do my best to put out some logical ideas. They may not be actionable, but we're working on some ideas on how to help this community we're building to actually embrace ideas at a higher level. And we're working on some things, and just keep telling your friends, keep putting the messages out there because it helps me to understand a lot about the community that we're building. And I just want to say again, thank you everybody. I mean, we maintained like 450, 500 people on this call the whole time. So thank you so much. And I know I got to um, some of the questions is kind of random doing these things. I'm new at this, so any ideas you guys have that you think would that you'd like to hear, please share those with me, and just keep the comments going. I'm looking forward to tonight's message. I usually do them right before London opens. I'm West Coast U.S. Time zone, so I stay up and I try to finish these things so I can get a feel for what the Londoners are going to do. And they've, it's always been helpful, especially in crisis modes. In other modes, I might do these videos, hours and hours, 6, 8 hours before that. But for right now, I'll continue to keep the patterns of what I'm doing, giving the insight. I've got actually a pretty good European following coming in. So anyway, I appreciate it a lot. And thanks again, man. You guys have been giving me a lot of love, and I just want to give it back. So we'll talk to you on tonight's video. Please make sure you tell your friends. Let's grow this channel and make a difference on a lot of stuff, because we're gonna do some really cool stuff. Haven't done anything in the public for a long time, and it's gonna be, yeah, I'm really having fun. So anyway, guys, stay engaged. We'll talk to you on the video tonight, and we'll keep doing these every Wednesday, same time. Thanks for watching.